Our next guest counts Robinhood as one of its competitors, allowing retail investors to trade in fractional shares of a company. Victor Wang is the CEO of investing app Stockpile, and he joins us now. Victor, I understand that, like Robinhood, you want to democratize access to investing, and your focus is fractional shares. But tell us other ways that you really see what you're offering as different than what Robinhood is.
I don't want to comment on Robinhood in particular, but, at Stockpile, we offer tools to help people make long-term investing decisions. We're not a platform for day traders. We don't offer risky investment tools like options or margin because we don't believe those are responsible tools for new investors. We want people to be able to make responsible investing choices with, the proper financial literacy and education, which is one of the things that we focus on.
Now, I'm curious if you've seen an impact, though, of the backlash to Robinhood in the wake of all of this GameStop Reddit trade and the fact that some people were unable to sell those or buy those GameStop shares. What has that meant for your business?
We've seen a lot of reaction to that. We've seen a big influx of new customers and additional trading behavior. As part of that, we made sure that we had discussions with our clearing firm. But ultimately for us, we were able to execute the vast majority of trades. But more importantly, we wanted people that come onto the platform really to look at things for the longer term, right? We want to make sure that when people are making investing choices, they're not making short-term decisions, around the next 6 minutes or 6 hours. We want people to think about the next 6 years or 60 years. It's the reason why we offer market on close pricing, and we're not a platform for day traders. We want people to think about investing as not a momentary decision, but a lifelong decision.
So, Victor, on the one hand, you got a lot of traders who are going to go through some pain or some losses because of the way they jumped into some of these options or shares. You got regulatory pressure. But at the same time, fintech in general just got a huge look by big parts of the country that weren't familiar with it before. So net for the industry, has the last week or two been a positive or not?
Yeah, I think the one thing is that it's been a sobering time for everyone, on both sides. There's a heightened awareness and knowledge about the risks of certain types of investing. But make no mistake, we're standing, with retail investors. We want there to be equal financial opportunity. But I think the most important thing that's happened is that in the past, 2 weeks, investing and personal finance has become a mainstream topic of discussion. I think when my 2 teenage boys and my hairdresser are asking about, what's GameStop? How do I invest? How does the stock market work? I think in the end, that really benefits everybody because people are proactively making the choices to learn about what investing is and how it works.
Victor, so often, though, we go through these periods where the market's at a high, the retail consumer gets into day trading, calling it investing. Really, it's gambling. And so many people try to hype that and say it's all inherently good just because people are participating. I want the retail investor to participate, to be educated, to make long-term informed bets. I'm not sure that's what's happening. How do we get the retail investor better informed in this for the long term in a way that's sustainable?
Yeah, I think you're exactly right. I think, the solution to all of that is always literacy, education, and awareness. I think the big thing that's happening right now with a lot of people jumping in is they're unaware of the risks that they're taking. So the open dialogue between people about what does it mean and what are the risks, I think that's the benefit. But what we really need to do is make sure that people are taking the time to do that. We've had significant growth at Stockpile with new customers. But what's more encouraging for us is that we've seen a significant rise in our educational pages, in our rookie starter guide for new investors. We want to provide that literacy and confidence to not have people feel like they have to trade in and out all day. Right? We want people to think long-term, once again, that it's not a momentary decision, that it's a long-term decision. And those types of tools are attracting people who are not traditionally engaged by the financial community. 25% of our customers are kids, 45% of our customers are women. These are people that have been marginalized or disenfranchised by the investing industry, and we want there to be equal financial opportunity for them, but through the right responsible tools and the financial literacy so that they can make informed choices.
Shepard Smith here. Thanks for watching CNBC on YouTube.